Good morning, everyone. Today, I am going to explain the top reversal entry setup using volume, open interest OI, and OI change. This setup helps us identify strong resistance levels where institutional traders or big players are active. Let's understand the conditions one by one. The first condition is that the call volume should be greater than the put volume. High call volume is one of the most important signals for identifying a potential reversal. When the call writer volume is greater than the put writer volume at a particular strike price, we consider that strike to be a strong resistance level. This indicates that call writers are aggressively defending that price. The second condition is to identify the presence of big players. At the strong resistance strike, both call volume and call open interest should be at 100%, which means they are the highest among all strike prices. In addition, the call side out of the money, autumn divergence should be significantly higher than the put side divergence. This suggests that institutional traders are actively building positions at that resistance level. The third condition is to compare call and put activity. At the strong resistance strike, the combined call volume and call open interest should be greater than the combined put volume and put open interest. At the same time, call OI change should be lower than put OI change. Now you may ask, why should put OI change be higher? A higher put OI change represents counter positions. These positions create an advantage for the market to move downward because they represent potential stop losses of put writers. If the market starts falling, these stop losses can be triggered, adding further selling pressure and adding advantage to the reversal. The next condition is that the resistance should remain stable. As the market approaches the strong resistance level, that resistance should not shift to another strike price. It should continue to hold the highest volume and open interest, showing that call writers are still confident about defending that level. Another important condition is holding. Even if the market temporarily crosses the strong resistance level, the 100% call open interest should remain at the same strike price. This indicates that call writers are holding their positions instead of closing them, which strengthens the probability of a reversal. Next, observe the trading volume carefully. The volume should not suddenly double or increase sharply, because such a move may indicate position unwinding rather than fresh position building. Finally, watch how open interest shifts. If open interest moves to a higher strike price without a corresponding increase in volume, the market is likely to reverse from that level. On the other hand, high open interest supported by high volume indicates fresh position building, which is generally a stronger and more reliable signal. To summarize, a high probability top reversal setup requires call volume greater than put volume, maximum call volume and call open interest at the resistance strike. Call OI change is less than put OI change. Strong participation from institutional traders is at strong resistance. Stable resistance with no shifting. Call writers continuing to hold their positions. No sudden volume spike due to unwinding. Any shift in open interest should be confirmed by volume, otherwise a reversal is more likely. When all these conditions occur together, the probability of a top reversal increases significantly. How to plan a trade at top reversal? Always wait till price reach day top. Find reversal point like previous day supply zone, previous day low, close or high. Draw the liquidity zone. Once volume spread analysis, VSA, candle is formed, take the entry on its high and low will be stop loss. Plan target at maximum put OI value. Now let's analyze the top reversal entry setup using the option chain data of 17th March 2026. The first thing we observe is the 23,500 strike. Here, the call volume is greater than the put volume. This is one of the most important conditions for identifying a potential market reversal. A high call volume tells us that aggressive call writers are active at this strike, making it a strong resistance level. Next, we notice that big players are active around the 23,500 strike, and we also see confirmation from the nearby divergent strikes of 23,550 and 23,600. When institutions build heavy positions across multiple nearby strikes, the probability of a reversal becomes stronger. Now, let's focus on the 23,500 strike in detail. At 23,500 call, we can see high volume, high open interest, and significant open interest change. This combination makes 23,500 a very strong resistance level. It clearly indicates that large institutional traders and option writers are defending this strike with heavy positions. Now let's compare it with the 23,500 put side. At this strike, call volume and call open interest are greater than put volume and put open interest. This tells us that the call writers are dominating this level. Another important observation is the open interest change. The put open interest change is 76.71 million, while the call open interest change is 71.38 million. This means that fresh positions are being added faster on the put side. However, we should never interpret this number alone. It must always be analyzed together with price action, option chain structure, and market behavior before making a trading decision. We also observe that the put open interest change is increasing, while the put volume remains comparatively low. This indicates that fresh put positions are being added without equally strong trading activity. This pattern deserves attention, but by itself it is not enough to conclude that retail traders are trapped. We always need confirmation from price action. Now let's summarize the complete checklist for the top reversal entry. First, call volume should be greater than put volume at the selected strike. Second, big players should be active at that strike, and nearby divergent strikes should also support the same view. Third, the call side should show stronger volume and open interest than the put side, while the open interest change should be analyzed carefully in combination with the overall option chain. Finally, and most importantly, we never enter the trade immediately after seeing the option chain. We patiently wait for a VSA, volume spread analysis, confirmation candle. Only when the VSA candle confirms weakness in buyers or strength in sellers do we enter the trade. By following this sequence, option chain analysis, identification of institutional activity, confirmation through open interest and volume, and finally VSA confirmation, we avoid premature entries and significantly improve the probability of capturing a successful top reversal trade. Now let's analyze another real market example from 20th March 2026 to understand how to identify a top reversal setup. The first thing we notice is that the 23,300 call strike is a very strong resistance level. The call side has strong participation from option writers, indicating that institutions are defending this strike. Now let's look at the put side. At the 23,300 put strike, we mainly observe open interest change, but there is no equally strong support from volume or overall open interest. This tells us that fresh put positions are being added, but we should not rely on this information alone. An even more important observation is that the highest put open interest change, nearly 100%, is at the 23,000 strike. This indicates that put writers are becoming more active at a lower strike, suggesting that the market participants are expecting price to remain above that level. When this is combined with strong resistance at 23,300, it increases the possibility of downward pressure if buyers fail to push the market higher. The next step is to identify the supply zone. Using price action, locate the highest supply zone near the day's top. This is the area where sellers are likely to become active. In many top reversal setups, the market begins its reversal from this supply zone. Now observe the market behavior carefully. Although the market crossed the 23,300 level twice, it was unable to sustain above it. Every attempt to move higher was rejected, showing that buyers were losing strength while sellers continued defending the resistance. This inability to shift and sustain above a strong resistance level is an important sign. It tells us that the breakout lacks conviction and that the probability of a reversal is increasing. Finally, the actual reversal started around the 23,350 level, where sellers completely took control and the market moved downward.